Hey, Dan Passarelli here. Well, this morning we had some news come out, and the news was good enough. CPI came out. It came in lower than prior. The expectation was for CPI to come out as 7.3%, and it came out 0.2% lower at 7.1%. And the core CPI was 0.1% lower than expectations. So that was enough to cause the market to open drastically higher. The S&P 500 was up 2.5% higher shortly after the open, which was about 10 points in SPY. It was up even a little more after that, but within an hour or so from the open, it gave up about half those gains, and it ended up closing just 0.7% higher. That's $3.02 in the SPY. So what's the big deal? Well, CPI lower than expectations affects the Fed's decision tomorrow. And that good enough news was enough to give investors the confidence that Powell was just going to raise interest rates by 50 basis points instead of the possible 3/4. The federal funds rate contract at the CME Group is pricing in about an 80% chance of a 50 basis point hike and only about a 20% chance of a 75 point hike. Notably, we did close below the 200-day moving average, that so key level. But the real deciding factor is going to be how the market reacts, not just to what the rate hike is. It's very likely it'll be 50 points, but what Powell says after that. As we look down at my sector watch list down here, almost every sector was up on the day, except notably the XLP, which of course, is the consumer staples. That was down just 0.14%, and XLY, which is the consumer discretionary stocks. And both of those are typically not as harmed by higher interest rates, and notably they were down today. So that's news going into tomorrow. This is Dan Passarelli, Trade Smart.